The market is kicking off bigly this morning with Nvidia up 8% to start the day. Micron up 20% nearly to start the day. Intel up 6%. Texas Instruments up 6%. Qualcomm up over 10%. Totally normal moves. This absolutely happens all the time. We're definitely not in a bubble, and there's all kinds of issues going on, right? Totally normal. Well, it feels like it's totally normal these days, at least. We're going to go through the market, and I'm going to give you my perspective as an actual finance bro on what's going on. First off, we can see the S&P 500 continues to push higher. Now, it ended yesterday almost up, after the CPI inflation data came through. A lot of people thought it was going to be a big, nasty, scary down day. And the market was like, nah, hold my beer. We're only going up from here. We only go up. Don't you guys understand? So the market is still pushing up higher. Then you've got the NASDAQ, which has gone up pretty much 30% in the span of 43 days, continues to be higher. In fact, it's higher as of right now, flat, slightly higher on the day. RSP, this is the equal weighted S&P 500. And you'll see this is down, and it continues to go down day after day after day. RSP peaked back in February. New button today. Hang on. Let me make sure I got the right button here. Is it this button? Open anyway. No, not the right button. Hold on. This one. Sorry. New button today. I had to find it real quick. And then I can hit year to date on the top and year to date on the bottom. And now they're in line. Look at this. Look at this. Cool. Check this out. RSP hit that new high. So this is the equal weighted S&P 500. And it has not broken through that new high yet. That same day back here, the S&P hit a new high, and we have been going up higher and higher and higher. And it is on an absolute gangbusters run. Now, the divergence here is extremely concerning to me. This means that fewer and fewer stocks are holding up the market right here, right? And we're actually going to talk about that more in the breadth in just a minute here. But one thing I also like to look at is the difference between RSP divided by SPY, and it continues to fall, right? It's falling, meaning that it's narrow leadership. You've got to be very selective and use a lot of caution here, because this is not a broad-based rally. We're getting a tighter and tighter and tighter rally here. Let's look at the VIX. VIX is up ever so slightly this morning. It hasn't really shown a lot of growth just yet, but traders are starting to put on more puts. That's what this is representing. And traders are starting to have more fear, and they rightfully should. They rightfully should, because things are not looking normal. And then let's check out this. I think this is the button I'm looking for. I changed my buttons around, so I kind of forgot. I kind of forgot which button I needed. Hang on. Is it this one? Yes, there we go. Cool. Now, I wanted to change this button around because this is the put-call ratio. The put-call ratio versus the S&P 500. So the S&P is 500s at the bottom, put call ratio is at the top, and we're sitting at 80 right now, meaning for every, we're not quite balanced between puts and calls. We're still a little bit heavily more weighted towards calls. However, you can see that it's still pushing down, right? That we're still getting more and more people coming through saying, oh, I got to buy more calls. I got to buy more calls. I'm just really anxious about this. This is not constructive. Everything that we've looked at is really interesting, right? So the SPY, in fact, this is something I want to do. The SPY trend being bullish, absolutely being bullish. Now, RSP is bearish AF to me. The difference between the RSP and the SPY is super bearish. The VIX, it's picking up a little bit. It's not really going all that far. So I'm going to give this a neutral rating. Look at this. Bullish for stocks, bearish for stocks, neutral for stocks. We're getting better at this every day. Now, put call ratio. Continuing to push down and down and down. We're definitely in the bullish sentiment area. So I'm going to, as great as this sounds, I'm actually going to be bearish on this, right? I'm going to be bearish on this because this is an area where you don't want it to be over leveraged in anything, because then it can snap back. Let's look at the MMFI. MMFI, the percent of stocks above their own 50-day moving average, is also starting to push down. That's the green line right there. The trend hasn't quite changed just yet, but the actual percent is moving down. We had peaked around 69%. Now we're down at 57. So I'm going to give this a bearish look as well. And then MMTH, this is the percent of stocks above their own 200-day moving average, also pushing down as well. So that's bearish for stocks. New one on the board today. This is the New York new highs. So stocks making new highs. If this is rising, more stocks are breaking out to new highs. That's a bullish sign. If this is falling, fewer stocks are making new highs. It's definitely falling. That's a bearish sign. Okay. What about low end? This is the number of stocks, or I should say, Stocks making new lows. Okay. Stocks making new lows continues to grow. Stocks making new lows continues to grow. That's bearish, right? So looking at top down on the market, what do we see here? The trend of the market is getting tighter and tighter and tighter. Less and less stocks are helping that. And we've seen that in the breadth. We've seen it in new highs versus new lows. So there's definitely some huge cracks under the surface you've got to be aware of right now. I think there's an elevated level of risk that a lot of people are just not willing to look at. Let's change direction here and look at the bond rates, right? Now, this has absolutely gone on a new tear. 2 years are pushing up higher and higher and higher. Now, this means that there's more inflationary pressures on the Fed to raise rates. And you can see right here, the year-end expectation is nearly a 50% expectation to keep rates the same. Most everything else is an expectation to raise rates. Now, I want to talk about real quick, and I'll remind you about this, right? Raising rates helps fight inflation because, for example, if you were to go buy a house and you had to pay a 7% rate versus a 6% rate, you may not be able to buy as big of a house, or the seller won't be able to sell it at as high as a price. So if that house was $500,000 with a 6% rate, they may not sell it to the same buyer at $500,000 with a 7% rate. So then they'll have to push the price of the house down to offset the increase in rates, which therefore helps lower inflation because everybody is in the same boat and they can't change the rates that are offered by banks, but they can change the price of the things that they sell. That's why rising rates works against inflation. And it looks like we're going to have to deal with that. Higher for longer, unfortunately. Let's go to the 10-year. Now, the 10-year is hitting new highs as well. Remember, anytime that the 10-year is pushing up higher, that's pressure on stocks. This is considered the risk-free rate out in finance world. Now, if risk-free rates continue to grow, why would you ever put risk on in the markets? Now, we're still at 4.475, which is not anything crazy. But again, if you had to compare between do I put money in the market for 4% returns or money in the 10-year for 4% returns, the 10-year is a safer place, right? And we're not to the point yet for that crossover, but it is pushing up higher. The 210 spread continues to push lower. The 210 spread, the difference between the 2-year and the 10-year, continues to push lower. It's not inverted yet, but it is pushing down. It's at 46 basis points right now. That's the difference between the 2-year point right here and the 10-year point right here. This spread is continuing to push down. And whenever we see the 2 and the 10 go inverted, that is a sign for a recession on the horizon. Doesn't always result in a recession, but a recession is more and more likely as that pushes down lower. And then lastly, let's go to the dollar index. Dollar index actually up on the day, right? Rising dollar on the day. Pressure on commodities. So gold, silver, and oil are going to have some issues today. However, they're looking at this and they're saying, hold my beer. The trend is down. However, the trend looks like it's about to, it's starting to reverse, I should say, because it's over the 10, it's over the 20. It may be over the 50 in the very near future. So again, stronger dollar generally puts pressure on commodities. And speaking of commodities, let's go look at those real quick. Let's start with gold. Gold this morning has done nothing. It's been going sideways for a hot minute, right? And I think I told you guys, I would expect to bounce between these two order blocks. And that's exactly what it's doing right now. Anytime it's coming up to this area, sellers are there to push it right back down. Anytime it's coming down to this area, buyers are there to push it right back up. It's going to take an overwhelming support by either the buyers or the sellers to push it through one direction or another. Silver, however, bro, this thing is going to the moon. This thing is going to the moon. We've got a plethora of people who want to own silver, and it's pushing up higher and higher and higher. And in fact, since this low right here, you're not going to believe how much it's gone up. From here to here, silver's up 25% in the span of 2 weeks. Can you believe that? I couldn't believe that when I measured that out. 25% in the span of 2 weeks. Next, copper, brand new all-time highs. And I don't know where that's going to go. All-time highs is generally bullish AF. But when it comes to copper, which can go into inflationary concerns, right? Rising copper means pressure on costs and inflationary concerns. I don't want that to go to all-time highs, right? I still have to live in this market just like you do. And then oil, another inflation sign, continues to push up as well. So things are not looking great, right? Things are honestly not looking great for stocks. I can find way, way, way more reasons why I'm bearish on the economy right now than bullish. So let's do this. Let's go look at the risk on assets. Let's go look at the risk on sectors and see what's going on over there. The risk on sectors would be your technology, your communications, which is going to have Netflix and Google and Meta. And it's going to have your discretionary, which is going to have things like Amazon and Tesla, and then your financials. So they're all looking a little bit weaker than they had been, right? They're all looking, I mean, even tech, as high as it's run, is still showing some weakness. Discretionary showing weakness. Actually, it looks like financials maybe in a bearish cross here in just a minute. Now, the question is, are they rotating out of risk on assets into risk off assets? Let's take a look. Well, I don't know. It looks like they are, right? Because you got staples down here, which is a defensive play, and it's pushing up higher, but utilities is pushing lower, right? So we might be seeing a little rotation, definitely seeing some rotation into energy. So while it's not conclusive, this market right here, you're seeing more stocks that are considered risk on assets rotating out and into risk off assets like energy and staples, and utilities has not caught it just yet. So what's my overall scorecard for today? My overall scorecard right now, let's take a look at it. Overall scorecard, give it just a second to load. Choppy to neutral right now, right? So you can see the S&P 500 in the background with the overlays, the colors back there. Choppy to neutral is where we're at today. Why? The trend of the market's still pushing up higher, but you have some warning signs like with breadth, market breadth, and then the rates. Both of those are definitely not going to be helping you. So market trend is strong. Breadth is definitely weak. We talked about that. The Fed rates are not helping for stocks at all. Volatility is not so bad, but just keep your eye on VIX. It may start to pop here in a couple days if things. And listen, when the VIX starts to pop and stocks are pushing up higher, that divergence is a big deal. You've got to pay attention to that. The dollar and commodities are not looking so great. Sectors are, this just changed, not looking so great as well. So what do we need to see to make this better? We need to see RSP equal weighting. We need to see the breadth come through in order to improve. What would we see to make this get worse? Would be the SPY losing its bullish trend. If the SPY loses its bullish trend, we got some real issues here. Now, let's take a look at the earnings calendar. A lot of earnings are coming out this week. Today is Wednesday. So you've got Nebius, you've got Alibaba, you've got Wix. And then this afternoon, you've got Cisco Systems, you've got Leslie's Pool Equipment. I don't know. Not the big names that we had the last couple of weeks, but just be aware that you don't have to trade through earnings. So if you own any of these, it is an extra level of risk that you don't have to take. 62 consecutive months with inflation above the Fed's 2% target. Awesome. Doesn't that sound great? And things are honestly not helping right now. Things are continuing to get worse, and we just talked about that. Hey, there's Steve Burns, one of my mentors. 820,000 followers. Can you believe that? Your trading system doesn't have to be perfect, but your risk management does. Always remember that. Then we've got fascinating data from Goldman Sachs on March 27th. Okay, this is going to get real deep. Dealer gamma positioning hit negative 7.24 billion, the second most negative gamma print on record. 6 weeks later, dealer gamma closed at positive 21 billion. Now the 8th highest positive gamma reading ever on record. Now listen, this is new to me. I got to figure this out too. To put that in perspective, 7 of the top 10 highest gamma readings in history came during 2001. So that's where market makers have to flip. They have to buy more long positions or sell more short positions in order to stay delta neutral. So really what this is saying here, and let's compare, let's get their points across, right? Meme bubble top, what year was that? 2021. And then today we're in a very similar situation. However, don't get this construed. Where was the market top? It came 6 months later. So me personally, just take that as a data point, but that doesn't mean to start going short. The NASDAQ 100 is trading 15% above its 50-day moving average for the third time in 30 years. That sounds great, right? Well, the last 2 times were during the 2009 crisis and the dot-com crash. Okay, maybe that's not so great. But again, that doesn't mean that things are going to turn around right now. Big headlines of the day. Walmart restructures 1,000 corporate jobs. AI chip stocks see mixed momentum amidst market fluctuations. Samsung faces a strike threat as pay talks with unions stall. Sam Altman reveals tech investments in Elon Musk ties during testimony. Some investor Ron Barron predicts SpaceX IPO will propel it to unprecedented heights. And Google unveils AI-driven innovations in vibe coding widgets at the Android show. Cool. All right, taking a look at market breadth inside of OVTLYR, what we see over here is it continues to push lower. More and more sell signals coming through, less and less buy signals. less uptrends, more downtrends. This mirrors exactly what we're talking about out in the marketplace. Okay. Nothing is different here, but it is a different measurement. Next, the S&P 500 still sits on that buy signal and has run like gangbusters. So here's the deal. I would not be buying it at this point here. However, if you had bought it back on April 9th, when that buy signal came through, give me just a second here. April 9th to today, I need SPY and I want year to date. There we go. From April 9th, which was right here, to today, the market has gone up about 10% so far, so just be aware that now is not the time to get long. Like in NASDAQ, right? April 9th was a buy signal on NASDAQ as well. And since April 9th, the market has gone up 17% on NASDAQ. So huge gains were to be made in the last couple of weeks. But honestly, now we've got way more headwinds than we would have had. Let's look at Micron. One of the biggest stocks right now, Micron, is moving like crazy. Let's go to Micron, MU. All right, MU, since the buy signal is up 90%, basically 90%, it's up about 3% so far today and continuing to go higher, right? Can this stock ever go down? I don't know. I don't know if it can, but it certainly has a ton of momentum here and a ton of volume. A lot of people are very excited about Micron. Let's go next to Intel. Intel got a sell signal on April 11th, so just a couple days ago. Let's go to Intel, INTC. And you can see Intel's really taking it on the chin, right? From that buy signal to the sell signal, from here to here, which was literally the top candle. Not bad, not bad. It was 162% gain, and now it's fallen how much since the sell signal came through? It's fallen from here to, come on, clicky. There we go, from here to here, down over 10% so far. So of course, I'm not telling you that Intel's going to crash, but I am telling you now's a great time to be taking your profits on Intel because you probably made a ton of money. And lastly, the semiconductor index, SMH, got a buy signal on April 9th. This is one we hadn't looked at before. SMH got a buy signal on April 9th. Actually, so this candle right here, and how much has that moved in that time? From April 9th to today, the semiconductor index is up about 33%. Not got a sell signal in place just yet. However, the fear and greed has gone up nearly to 100. It's come back ever so slightly. And then if you look down here, there are 23 companies inside the SMH. You can see nearly all of them are greedy AF. Is it starting to move down? Ever so slightly. The average score for everybody in the SMH is starting to get slightly less greedy. So take that as you may. And listen, if you're ready to save time, make money, and start winning with less risk, head on over to OVTLYR.com and subscribe, and then click one of these two videos. Y'all have a fantastic day. We'll talk soon.